Good morning, everyone, and welcome to the CMSA Chapter Leader Financial Webinar. Our presenter today is Cale Turner, CPA with Thomas & Thomas LLP. Also on the call is the CFO for CMSA, David Walker, and our Michelle Lee. I am at this time going to officially turn it over to Cale. The webinar will be recorded, so you will be able to reference it in the future, as well as those chapter leaders who maybe could not join us today, or presidents. You might want to let your treasurers know it is available. But we are very happy to welcome Cale. And Cale, at this time, I'm going to turn it over to you.
Yes, thank you, ma'am. Good morning, everybody. As you can see on your screen there, we're doing a webinar this morning on for chapter leaders that is kind of on the financial responsibilities, the chapter compliance responsibilities for those of you that are involved in leadership of the chapters. Yeah, I've done this presentation now. We did this last year about this same time. We also did one, our firm, at the conference last summer. And so I know some of you have heard me talk about these topics before. I've tried to kind of update it for what's relevant with what's going on now. Some of it will be a little repetitive for any of you that have heard it before. But our main objective is to make sure everybody has a solid understanding of not only what the Internal Revenue Service requires and expects of organizations that they've given a nonprofit approval to, but also national as an organization. And we just want to make sure everybody understands their responsibilities, because as we'll talk about, you can get into some trouble with the service and with your nonprofit status. And we just want to make sure everybody understands the steps that need to be taken, the things that need to be put in place in order to make sure that doesn't happen. Starting with just a little bit of housekeeping here before we get going. As we said at the beginning, all the attendees are muted during the call, but there is the option for asking any questions that you have by typing that in the question box there in the control panel. And I want to be sure to encourage you to do that. I know every chapter, we've got chapters that vary in size and complexity and the things that they have going on. I want to make sure everybody asks the questions that are on their mind. Things have come up during the presentation. I know I can't promise that I can answer all of them, but please ask any questions that you have as they come to mind. We'll address those when we get to the end of the presentation. And then after we're done, I want to encourage anybody. I'll have my contact information up at the end of the presentation with my phone number, my email address. Please feel free at any time when something comes up that you have a question about to shoot that to me or to give me a call, because we want to be there to help. I can promise you that the things that happen with the Internal Revenue Service are much easier to deal with on the front end than they are the back end, and I'll talk about that a little bit during my presentation. But always easier to put things in place at the beginning than it is to deal with them after they've already been done wrong, or the IRS has already started looking at those. And again, we're gonna record this presentation so that if you know anybody that's involved with your chapter that couldn't make it online today to hear this, the presentation will be recorded so they can access it. I'll tell you a little bit about our firm and me. Thomas & Thomas has been involved with the national chapter of CMSA for more than a decade. Our audit partner, Patty Weed, who couldn't be here today, but who handles all the work from an audit standpoint for CMSA National has been involved even longer than that. I've been with Thomas & Thomas since 2009 and have worked with CMSA that whole time. Our firm is based out of Little Rock here in Arkansas. We do a lot of nonprofit work, probably 65–70% of the work that we do is involved with nonprofit organizations. We handle work for 11 of the top 20 nonprofit organizations in the state. I personally file more than 115 990s a year, and don't be jealous of that. I can promise you it's not as glamorous as it sounds, but we do work with nonprofit organizations of every size, all kinds, from 501c3 charitable organizations to the C4 social organizations and the C6s. Any kind of nonprofit organization out there, we do a lot of work for them. And so we see just about everything that comes up with these, and that's why we want to do presentations like this, because we've seen the things that are done right, we've seen the things that are done wrong, and we want to make sure that everybody's on the right path to making sure they're staying in compliance. So there's a few things that I want to focus on today before we kind of maybe get to things that are questions that you may have specific to your chapter. The first thing I want to talk about is the current compliance environment, what's going on with the IRS, what they're looking for, looking at nonprofit organizations, kind of where their focus is with these entities. I want to touch base since it's February and year-end things have come and questions have popped up about chapter's requirements for Form 1099s. I want to talk about that, make sure your chapter is doing everything right when it comes to those. Then we'll kind of get into the Form 990, go in depth about what's required from you there, make sure you're doing the right things with your filing requirements. We'll talk a little bit about how Thomas & Thomas can help you if need be, and make sure everybody understands what their obligations are there. Then I'll kind of get into IRS focus areas about the 990s and what they're looking at from your filings, and then I'll just touch on a couple of other issues that we've seen pop up with the charitable organizations that we work with. The first thing I want to talk about is the compliance environment. As many of you probably read and heard about on the news, the big story that has kind of come out in the nonprofit world in the past couple of years is this Tea Party scandal. It was made into a political thing, and it may very well be. That's, I don't want to comment on any of those from a partisan standpoint, but what happened is, that every nonprofit organization out there has to submit an application to the Internal Revenue Service in order to get approval for their status as a nonprofit entity. And in starting after 2008, and it really happened more in 2010, 2011, 2012, there were a lot of nonprofit organizations that submitted their application for their nonprofit status, and any that had a political name, or what the people that were working at the service out of the Cincinnati office, which handled these applications, identified as a political-oriented entity, and especially any that were flagged as associated with the Republican conservative right-wing side, were flagged, and their applications were delayed. They were scrutinized. There were questions asked of their applications, And so the big story came out, well, the current administration is obviously focusing on these organizations because they aren't aligned politically with them. And I know, and of course the question you're asking, well, how does this matter to us? What does it have to do with our nonprofit organization? Well, the problem is that created a backlash, and that backlash has resulted in an increased scrutiny of everything nonprofit-oriented. I can tell you that we've had chapters within CMSA and related type organizations that I've worked with where I've gotten letters from the people at the Cincinnati office, IRS employees, who I've seen now be subpoenaed in front of Congress to testify about some of their actions. And so what's happened is there was this, the stories came out about this unfair focus on these political organizations. Well, the IRS's response has been, okay, we're gonna increase scrutiny on every application that's out there. And what that's created is just an unreal time delay in dealing with some of our organizations that have nothing to do with political activity, nothing questionable at all about their purpose and why they're organized, but we're having a horrible time with dealing with the nonprofit service center that's based out of Cincinnati because everything has been delayed. And I can tell you, I'm sure some of you that are on this call that I've worked with, I understand how frustrating this process has been. And I can honestly say it's been the most frustrating thing that I've ever had to do, had to deal with IRS. You know, we work with our for-profit clients all the time when things come up. I've gone through audits for for-profit clients and never had the issues that we're having with the service these days when it comes to the nonprofit sector. And just to give you an example, we've worked with clients who simply wanted to change their name, and the process has taken 7 months. And when in the past, before this all happened, you were talking about a 6 weeks max turnaround on these requests. So even the things that you would think would seem so simple and so easy to deal with have not been. It's turned into a process that's frustrating for everybody involved, a time-consuming process, and I know that those of you that we've had to work with on some of these things, it's been a very frustrating time to do this. And so that's kind of where things stand, and I'll talk about here in a little while how we can avoid it, because I can tell you right now the most important thing is doing proactive things on the front end to keep you from getting to this point, because when we get to the point where we have to work on chapters that have had their nonprofit status revoked and we're trying to reapply, chapters that, you know, failed to change maybe their fiscal year when we all try to get on the same fiscal year, the name changes, everything. It's just there's nothing simple in the current environment with getting this stuff right with the service. And I bring all this up because, one, I want to make sure everybody understands just how long this stuff is taking to get right. But also, I hope everybody understands how important it is to do this right on the front end so that we don't have to get to this point, because it's a very time-consuming and frustrating process. And I'll get into that kind of planning here in a second, but I wanted to, with it being February and everything, make sure everybody understands their 1099 requirements for their chapters. So Form 1099 is the form that the IRS requires any individual, company, entity, nonprofit organization to provide to any person or entity to which you pay more than $600 a year for services, rents, or awards. Now, the IRS is running on a calendar year basis for the 1099, so January 1st to December 31st, any person or entity to which your organization paid $600 or more for the things I list there, the organization is required to issue a 1099. So this is similar to a company that has to issue a W-2. What you get to file your tax return for as an employee that you provide. A 1099 is the W-2's cousin for non-employee services. So usually the chapters see this with presenters that do presentations or awards maybe that are given within the chapters is typically where we see this. It's mainly presenters where your chapter may run into this. And again, this is for personal services, so it's not for utilities. Some people ask about that. It's not for if you don't have to do it for cell phones, that kind of thing. That sometimes people get the impression that they have to do that. It's only for personal service, and that includes legal services, accounting services. Like I said, presenters. If you pay somebody more than $600 for those type of things, then you're required to issue them a 1099, and that 1099 needs to reflect how much they were paid in total during the calendar year. There are some exceptions to that rule. Incorporated entities do not have to be issued a 1099. So some presenters to your chapters may go out and form an S corporation or C corporation where they do their work through. If you know that they're an incorporated entity, you don't have to issue a 1099. Some of the chapters may rent space for their meetings, that type of thing. If those entities are incorporated, you don't have to issue a 1099. There are, and while we really want to make sure everybody understands this, there are deadlines for these forms. There are penalties associated with these forms. The 1099 copy that goes to the person who did the service should have been issued by January 31st. So if you have this within your chapter that you should have done in 1099 and haven't done that yet, you are technically late on that as far as getting it to the individual themselves. Now, the IRS, you don't have to submit the copy to the IRS until the end of February if you're submitting it by mail. So every 1099, you have to issue a copy to the person themselves who provided the service. You also have to issue a 1099 or a copy to the IRS so they have it on record that they can match up that person reports that income. That's not due to the service until the end of February if you submit it by mail. If you submit it electronically, which some of you may have, any chapter that might be using QuickBooks or some other accounting software to keep up with their financial information, a lot of those programs have a way to submit that by electronically, and if you do that, it's actually not due to the service to the end of March. Well, we want to make sure everybody understands that if you have paid somebody more than $600 for personal services, and like I said, that includes legal, that includes accounting, and they're not incorporated, that you need to be issuing them a 1099. If you fail to do that, the IRS can come in and say you didn't issue the 1099 that you should, and it's a $100 penalty per 1099 that wasn't issued. So we want to make sure everybody's doing that. Again, if you have any questions about should this have gone to this person or not, be sure to ask that. We also want to make sure that the chapters are getting the information on the front end when people come in to provide personal services to you, that you're capturing that information that you need in order to do the 1099s. The way you do that is through what's called a Form W-9. You can print this off the IRS website. It's very easy to go and get those. Print them off. It basically asks for the information that would go on a 1099. So the person that's providing the service fills the W-9 out for you, gives it back to you. It's going to have their name, their address, their IRS status, whether it's an individual, a sole proprietorship, a corporation, a partnership. They're going to check a box on that to designate that. And that way you have the information on the front end in order to issue them a 1099. Because I can promise you, getting this information on the back end is not easy. When you get to January of the following year and you start trying to get the information to fill out the 1099, sometimes it's hard to track people down. Sometimes it's hard to get them information from them. It's much easier on the front end to say, okay, before we give you your check for giving us a presentation, for doing our legal services, for doing our accounting services, whatever it may be, please fill out this W-9. I can assure you that it's easier to get the information before they get their check than it is after they get their check. So please keep that in mind as people are coming in to provide these services for you. That's the 1099. The 990, which is the informational return that's required from nonprofit organizations to file with IRS. Let's talk about those requirements now. The first is the full Form 990. This is required for organizations that have gross receipts greater than $200,000 or total assets greater than $500,000. So that's not an and statement, that's an or statement. Either of those two things are met, you've got to file the Form 990, full Form 990. I realize most chapters, this doesn't come into play. That's not required, so most of you won't deal with that. The one that catches several of these organizations is what's called the 990 EZ, which is a little bit of a misnomer. There's not, there's a lot of information that's required on it. They call it EZ because it has fewer questions than the full form, but there can be quite a bit involved in completing that return. It's for organizations that have gross receipts less than $200,000 and total assets less than $500,000. And then the last one is the 990N, which is commonly referred to as e-postcard. It's for any organization that has gross receipts less than $500,000. I realize that one catches quite a few of the chapters. At least half of them usually have gross receipts less than $50,000. But that's the three forms that the IRS requires. So what the most important step after you get done with your fiscal calendar year is to determine how much in gross receipts did my organization received. And I want to stress there that it is gross receipts. So you've got to look at your total deposits, basically, that are made as an organization. It's not net of expenses. So if you have a conference within your chapter, you have your meetings within your chapter, obviously you have the expenses that are associated with those. Those expenses don't get to be factored in when you're looking at your filing requirement. It's your gross intake. So, if a chapter meeting brings in $300 and there's meeting expenses of $100, it's not the $200 net. It's the $300 in gross that you've got to look at when you're deciding which form is going to be required of the chapter. Those forms they all have an initial due date of May 15th, and understand I'm basing this on the chapter having a tax year of January 1st to December 31st, which I'm pretty sure we've gotten all chapters. I know there's a couple that we're still working. Again, it's been a nightmare to get this changed with the service, but there's some chapters that we're still working on getting to the December 31st year end, but I know the vast majority of chapters are on this tax period from January 1st to December 31st. Assuming that is your chapter's tax year, then the initial due date of these forms is May 15th. There is an extension available for that. It's automatic. As long as you request it, it takes you through August 15th. But you do have to request it. It's automatic, but there is a piece of paper you got to file with the IRS that says, hey, we need a little more time because to get this stuff together. That'll take you through August 15th. And even then, there's a second extension that's available through November 15th. The big difference on that one is it's not automatic. You've got to actually have a reason for doing that. It can be fairly simple. I need more time is not a reason, but I'm waiting on information from a third party. That's a legitimate reason. And that's typically what we put as our request on our request for extension, is that we're waiting on information from a third party in order to complete our filing requirement. And then that extension actually has to be signed. So, you know, it's much easier to do these filings and get them taken care of, especially the 990N, if that's the only thing that's required from your organization. Get it in by May 15th. You know, I understand there's extenuating circumstances sometimes that requires at least that first extension, sometimes that second extension. But we always tell our clients it's easier to get it taken care of and get it done. We'll talk about here the cost of not doing these required filings, because they can be severe. If nothing is filed, if none of those forms, the full 990 or the EZ or the 990N, if those are not done over a 3-year time period, then the IRS automatically revokes your tax-exempt status. And the thing I want to stress about this is that's statutory. It's in the law. It was passed back in 2006, 2008. There were a couple of congressional laws passed that went into effect that said if an organization that we've granted tax-exempt status to in the past does not file for a period of 3 years, automatically revoked. And since it's in the law, it's statutory like that, there's nothing the service can do about it. There's no sob stories. There's no, please forgive us this time because we messed up. They have no choice. They have no discretion. I've, believe it or not, worked with some very, very helpful people from the service that want organizations to keep their exempt status. They want to do what's right for the organization. Their hands are tied. There's nothing to do about it. It's in the law. And if you don't file for 3 years, then they automatically have to revoke your status. When that happens, the only way to get it back from a pure same organization filing the same kind of return, you have to go through the application process all over again. So you've got to file a new Form 1024. You've got to submit a new application fee. That application fee is $850. And even if you took your original Form 1024, if you have to file one, put the same exact information on it, just change the date, and resubmit that, still $850 if you get revoked by the service if the chapter status is taken away. You've got to submit the whole form again. Then, to get that application approved back to when you were revoked. So what the IRS does, if your chapter goes 3 years without doing the required filing and gets revoked, they revoke it as of a certain date. Let's say that date is May 15th of 2013. So say filings weren't done for 2009, 2010, or 2010, 2011. They caught it. They revoked it as of May 15th of 2013. In order to get reinstated back to May 15th of 2013, you've got to go back and submit the 990s that you missed, whether that was a full 990 or a 990 EZ. And once you submit those, they then charge late filing penalties and late interest on those 990s. And I can tell you, those penalties are statutory as well. So from day one of a late filing of a 990 or a 990 EZ is $300. It goes to $600 after 1 month. And then interest and penalties start accruing on that $600. And that's an automatic fine. It's what's in their books. Now we've had some success with getting organizations out of those penalties. Lately, within the past year and a half, 2 years, the IRS has cracked down on that, and it's not been as easy to get those penalties removed. It's definitely not been as easy to get those penalties removed if they've already been paid. And we've dealt with that with some chapters, with some other organizations that we've worked with. Once the IRS assesses that penalty, it's hard to deal with them to get that penalty removed. It's virtually impossible to deal with them if that penalty actually gets paid, even if there was a reason for the late filing. Something that I want to make sure everybody's aware of when we're talking about this, most of the chapters when they started went in under the umbrella of CMSA, the national organization. So what the IRS allows is if there's a national entity that has applied for tax-exempt status, they can then bring in umbrella organizations, chapters, that as long as they are reporting those chapters as affiliated organizations that are under their umbrella, those chapters are automatically approved for their tax-exempt status. So obviously CMSA National submitted a 1024 to get their tax-exempt status. That got approved for by the IRS. Every year, CMSA National is required to report to the Internal Revenue Service a list of all the organizations that fall under their chapter umbrella. So any chapter that has come under CMSA National can submits that list to the IRS. It lists the chapter's employer identification number. It lists their name. It lists their address. And National says, okay, these are our umbrella chapters. And the IRS says, okay, those chapters don't have to file a separate 1024 because we approve them because you're under their umbrella. There's two things that go along with that. The first is, it doesn't matter if you're under their umbrella, you still have the requirements to file the appropriate 990. Okay? So if your organization had more than $50,000 in gross receipts, even though your tax-exempt status is under National's umbrella, you still have to file a 990 EZ for your chapter. Being under the umbrella doesn't get you out of that requirement. Being under the umbrella only gets you out of having to submit your own application for tax-exempt status. Same with the 990N. Each chapter, even though they're under the umbrella of the national organization, has to file the 990N. So that's two separate requirements. So keep that in mind. Yes, your exemption may be under the umbrella of national, and you didn't have to file your application initially in order to get your non-profit status. You do still have the 990 requirements, whatever that is, the full form, the EZ, or the 990N. The real problem is if you get your status revoked. If the chapter doesn't do the required filings over that 3-year time period and your status gets revoked, you can no longer come back under the umbrella. So let's say you have a chapter within a state, and we'll just use Arkansas since I'm sitting here. So say a national organization brought the Arkansas chapter of CMSA under their umbrella. Every year the national organization is going to file their list of the organizations that are under their umbrella, the IRS is going to say, okay, Arkansas chapter, you don't have to submit your own application. You're good. You have a nonprofit status. Let's say that the Arkansas chapter had $70,000 in gross receipts. The Arkansas chapter is required to file the 990EZ. If they fail to do that for that 3-year time period, the IRS is going to revoke their tax-exempt status. When they do, they are now required to submit a Form 1024 application for nonprofit status that's based solely on their organization, their chapter. They can't go back to the national organization and say, put us back under your umbrella. The IRS doesn't allow that. So it's so vitally important to make sure that you're keeping up with these filing requirements, because once you lose it, then you're on your own for getting approved by the service. And that requires preparing your 1024. It requires paying for your 1024, not only the person that pays it, and I can tell you it's hard for us as a firm, even though we do numerous ones of them a year and have a very efficient process for them, it's hard for us to do any less than $500. Then you've got to also have the application fee with the IRS, and you've got to hope they approve it. We've done this for some chapters, and going back to the increased scrutiny, even though there's nothing that you would think would be looked at by the service on these applications for CMSA chapters, you'd be very surprised at the things they're asking for. We had a chapter where we submitted our initial 1024. The agent that was involved in looking at that 1024 came back and asked for flyers that were advertising the meetings. They asked for agendas from every meeting. They asked for emails that went out about those meetings, all kinds of questions about the chapter activity. I mean, things that you would just could never fathom that the IRS would want, that they asked for in follow-up to that application. And even after we submitted those things, still had a hard time getting the IRS to approve the application. So I just can't stress enough how important it is to do these things right on the front end, because it has become a nightmare to get them fixed on the back end. And I understand, and I'll go ahead and put these up on the screen. We understand why some of these things happen. The biggest is treasurer turnover within these organizations. I know what's frustrating for a lot of you is this is not what you do. You're not an accountant. You're not, dealing with nonprofit organizations. Most of you have volunteered to be a part of what's going on here. You're doing it because you want to be involved, and you want to be educated, and you want to be a part of your profession. And now you're having to deal with this stuff that has nothing to do with your primary focus. And we understand that it's frustrating that you're having to do this stuff. And so what happens a lot of times, it's not a glamorous thing. It's not a glamorous position. And so there's this turnover within the board, turnover within the treasurer, and that happens, and people don't get educated enough. They don't understand what they need to be doing, and that turnover creates, we got a new treasurer in year 1, failed to file year 2, failed to file year 3, and now we're in this mess. And that all kind of the other things that come along with this, the misunderstanding of what's required, the miscommunication of who's going to do what, those all lead to the failure to file and get everybody in trouble with the service. So the reason we do these presentations, the reason we come to the national conference and do these presentations, we want to make sure that everybody understands. So if you're on this call and you're, the chapter president, not the treasurer, please make sure they they listen to a recording of it. If you're a treasurer and you're going to be an outgoing treasurer, you know, the easiest thing is to make sure that who's ever coming into your position understands what their requirements are going to be to maintain this financial information, to understand what the requirement is as far as filing appropriate form with the Internal Revenue Service, and get it done right on the front end. You know, we are, as I said, we're the auditors and tax service providers for CMSA National. We also work with a dozen of the chapters currently to help them with their filings or to help them with issues that they've run into. And you know, our primary motivation is helping National, because that's our client, and in these chapters that we take on, helping them get their filings right and making sure, helping them to get out of issues that they may have gotten into, but helping them to do things correctly on a go-forward basis is what we do. When we work with these chapters, we kind of become a clearinghouse for their filings and for their correspondence. You know, the nice thing about what we can provide is we don't have treasurer turnover, we don't have board turnover, and so when we're working with these chapters, we help to manage their filings for them, their due dates. We help them understand, okay, here's what you've got to do before May 15th every year. And as I said from the very beginning, we work with so many of these chapters across the scope of budgets and revenue that we deal with them consistently. We've dealt with IRS and working with these chapters, so we can kind of provide that perspective of where, okay, we know this is what you need to do. We have IRS agents that we can call and we can talk to, and they're as helpful as they can be. Like I said, sometimes they're you know, put into a box by what they're required to do legally, but we have worked with them, and so we can help in that respect. And if you decide to use Thomas & Thomas to do this stuff for you, you know, these are kind of the things that we ask for from our organization. And I'll talk about here in a second how we understand that various chapters have people they work with. We've even had some chapters come to us and say, we've got a long-standing relationship, but we want to use you, and we've come back and said, you're better off with this relationship that you've had, because they're close, they understand what you have going on, and they can help you in a more efficient manner than we can. But for those chapters who do say, okay, we want to use who's National is using, who some of these other chapters are using, that understands what we have going on, if you want Thomas & Thomas to help you, these are the things that we ask. We ask that as you get this IRS correspondence that says, hey, we haven't heard from you, or hey, we're revoking your status, that you forward those things to us so that we can deal with them. And then if you want us to take care of your filing requirements, we have the chapters that we're working with. They send us their bank statements from the previous year. They send those to us by March 1st. We evaluate those statements. We look at their gross receipts. We determine what they're going to file, and then we follow up on those things. We have several chapters where we file their 990Ns for them. We do that. We're set up as an electronic filer. We submit those. We make sure they're getting taken care of, and then we forward them the confirmation with the IRS that says, okay, you're good for this year. If gross receipts require either the 990EZ or the full 990, we come back and we say, okay, here's the other information that we need in order to file that form. We want you to understand, if the chapter, again, if the chapter already has the controls in place in order to make sure they're taking care of their filing, that's great. You know, we're not, our goal here is not to go out and be doing work for all 70-plus chapters, because we understand that that's not always an efficient process. And like I said, some chapters already have a very established relationship with local accountants that can provide them a different level of service than we can. And if that's the case, that's great. But each chapter needs to understand that National also has a vested interest in making sure that all their chapters stay compliant with IRS. If a lot of chapters are failing to maintain their status, then at some point the service can come in and say, okay, the national organization is not doing a good enough job helping their umbrella organization understanding their requirements, and there becomes an increased level of scrutiny on the national organization. So there's a vested interest of national to make sure every chapter is doing the right thing from a selfish standpoint, but also from a standpoint of, you know, we understand these chapters are on very tight budgets. You know, you want to spend your money promoting and educating the members of each chapter. And you don't want to spend $1,500 applying for a new tax-exempt status, paying a CPA firm to do your application, or having to pay penalties to the IRS. That's not where your budget needs to go. It needs to go towards your purpose of what you're doing. And so, you know, chapter has an interest in seeing this stuff. And so these are the things that National is asking for you to submit in order to say, okay, we've done the things that we needed to do. So if your chapter is using another accounting firm to do your 990 EZ or your 990, that's fine. Chapter just wants to know who it is, to make sure it's being taken care of. National wants to know who it is to make sure it's being taken care of. If you're doing your 990, if all you're having to do is a 990N, when you file that, the IRS should be sending you an email when they do. Forward that to Michelle Lee or somebody at National so that they can know all this stuff has been taken care of. And then if you do have a full 990 EZ requirement or a full 990 requirement, that a copy of that at some point during the year, whenever it's filed, gets sent to National so that they can have that on record. If you do want to use Thomas & Thomas, you know, there's kind of what we charge for the various forms, and that's when information is provided to us, you know, in the format that we request, and we can talk about that if you do decide to engage in Thomas & Thomas to do those things. What we do for all the chapters that we work with, we send one itemized bill to CMSA National, and they turn around and request those fees from the various chapters. We do have some chapters that want us to go above and beyond just handling their tax filings. There's chapters where, you know, they're using an accounting software, a QuickBooks, that kind of thing, Peachtree, and we come in and we help them with that. We set up their accounts for them. We kind of tell them how to do their accounting. We have some chapters where we're doing their bank reconciliations for them. We're preparing their financial statements for them. If you want us to do that, we're happy to do it. You know, on average, I've put up there, you know, that usually is $100 to $125 per hour. But we want everybody to be comfortable with what's going on with their chapter and what fees they're paying. And so even if it's just a chapter, you just want to talk about it. If you're using somebody now and you want to say, well, what could, you know, here's what we're having a professional services firm do for us. If you were going to do the same kind of work for us, what would the fee be? We want to be very upfront with that, and we want everybody to be comfortable with that. Just a couple of things I want to just throw out there about the IRS and what they're looking at. We've already talked about the scrutiny they're looking at with applications. You know, the IRS wants to know that the board members of these nonprofit organizations are doing the things that they recommend in order to have strong financial compliance. You can go out to the IRS website, irs.gov. There's a whole section devoted to nonprofit organizations. There's checklists that they give out for nonprofit organizations. You can follow those. You can print those out, make sure your organization is doing them. Because if you ever do get audited, if the IRS ever does come look at what you're doing as a chapter, those are the things they're going to look at. One other thing that the IRS has kind of harped on, excess benefit transactions. You know, if board members are in any way receiving a benefit from the organization, that's above and beyond what a third party would receive, that's when you get in serious trouble with the status. With IRS. It goes beyond revoking your status. At that point, they can come in and charge penalties for that excess benefit that you might receive as a board member for the organization. I know that's not happening, but whenever you have a excuse me, whenever you have a transaction that might involve a board member and the chapter, whether it's doing a presentation or a board member, the chapter paying to send the board member to the national conference, all those things are fine. You just need to make sure they're being done the same way that they would be done for any other member of the chapter. So anytime questions of that nature come up, it's so much easier, like I've said throughout this whole thing, to deal with on the front end. One other thing I want to say, state reporting requirements. Be sure you understand what your individual state requires for nonprofit organizations. Some require nothing. Arkansas, I can tell you, requires any nonprofit to submit a copy of their 990 if they're soliciting charitable contributions. And I know some chapters don't. Some chapters, all their money comes from conference fees, meetings, that kind of thing. But I know within Arkansas, even if you're a nonprofit organization and you receive charitable contributions, you have to register with the Attorney General, and there's a form that has to be filed every year. So be sure you're checking with your state to make sure you're doing everything to keep your nonprofit status within the state. We can help you with the IRS, and we deal with a lot of states. Make sure you're doing the things within your state that's going to keep you okay with them and their requirements. And again, understand your board responsibilities. The IRS can look through the chapter itself at the board members and say, hey, you didn't do the things that you needed to do to make sure you're filing the correct forms. And especially when it comes to excess benefit, they can come in and penalize individual board members if those kind of transactions occur. So make sure you understand your boards. Like I said, the IRS website is very helpful, and we can obviously be an information resource on that as well. There's a couple things, and I know you've all received this from National. This is the things that the National asks for every year. About May 15th, your prior year financial statement and your current year budget. And I know Michelle Lee can help you out with those requirements. Right there is our contact information. As I said, Patty Weed is an audit partner at our firm. She handles audit services for CMSA National and we work together on these other aspects of it. There's my email address. My phone number's not up there. Email is the easiest way to get in touch with me, but if you ever do want to call, it's 501-210-7340. And again, we're here to help. We have a interest in making sure everybody stays compliant. I can promise you, if you call me and ask a question, I'm not going to send you a bill for a 20-minute phone conversation, so don't worry about that. It's so much more important to us to get things right on the front end. That's all I've got. I don't know if anybody submitted a question. I know some of the stuff you want will come up a couple days from now as you think about it and you talk to other people in your chapter. And like I said, feel free to email me or call me. But do we have anything right now?
Yes.
And
thank you very much, Kel. That was very informative. Even though I've been doing this for a while myself, I learn something every time I listen to you. So, okay, this is actually kind of a question of mine. That when you were talking about the charitable contributions, since all of our chapters are actually 501c6s and we're not a charitable organization, technically we're not taking like donations for
Right.
charity purposes. But what about when they have sponsorship monies or things like that maybe a company's giving? Those don't have to be reported. Doesn't fall in the same kind of category for the state typically, does it?
Yeah, that's kind of when I say charitable contribution. Yeah, nobody's taking a deductible contribution for any of these organizations, or they shouldn't be. Since you aren't falling under 501c3, which is typically what you think of as a charitable organization, a church or an Easter seal, that kind of thing, it really depends on the state, and that's why I stress to everybody to understand. In Arkansas, no, you don't have a reporting requirement in Arkansas. Arkansas only looks at soliciting true charitable contributions. Some states do require additional information to be provided. I know there's some states where the Secretary of State wants to know your board member makeup every year. So that's why it's just very important to see what your individual state requires. So yeah, sponsorships, most of the time, no, it's not. That's not something that would trigger a state filing requirement.
Okay.
But like I said, there's some states who require, even if you're not accepting a charitable deductible contribution, that they want to know you're out there still, or they want to know who your board members are. So be sure to check that. It's usually on most states we've dealt with. It's a matter of going to a website. Whether I would check with the Secretary of State and the Attorney General and see if there's anything you need to be doing as a nonprofit organization to maintain your status there within the state.
Okay. Okay, the questions are starting to flow in now. So I'll go ahead and let everybody know if we do happen to go over and you have to get off, all the questions will be recorded as well, so you can listen to them at a later time if you need to catch up. Still on that, charities, one of the other questions that came in, if a chapter does a group walk, for example, with the breast cancer walk, and all monies are sent directly to the chapter by the individual participants, does the chapter have to submit anything related to that? And I would also personally want to add to that, I would always recommend myself to chapters that ask about this that those monies actually go directly to the breast cancer, because those individuals aren't going to get their deduction by giving it to the chapter to do as a group.
I would always, yeah, I agree. I would always want the checks, even if you collect them as an organization and submit them all at once. I would always want the checks to go directly to the organization. And I mean, we see that Thomas & Thomas has a team that does Susan G. Komen breast cancer walk every year. Even though Thomas & Thomas collects the money and submits that to the organization, each individual employee of Thomas & Thomas that participates in that makes their check out to Susan G. Komen. Now, if I had a client who had made the check out to their organization, something they were a member of, and they knew it was for that, would I take a deduction? Probably take it. But if the IRS comes in and looks at your individual income tax return where you've claimed a charitable contribution, they're going to want to see the check made out to the charitable organization itself. So there's not a problem with the organization kind of being the organizer and collecting all that stuff and submitting it and sponsoring the team itself, but the individual people that participate and contribute to that cause, it's a cleaner process if you ever come under audit to go directly to the charitable organization.
Thank you. And on top, if a chapter were to actually take those monies directly and the member knew they weren't getting the deduction, more than likely, but the chapter still should not be submitting anything as a deduction themselves in any way.
No, because they're not, as a nonprofit, there's no benefit there. So I'd try to avoid that. That's the best thing for me to say. I'd try to avoid it.
Okay. And that's what I would normally guide people to as well. So a couple of questions on the tax-exempt status, and I think what's happening is, and we get this question a lot here directly too, folks confuse the tax-exempt terminology with also sales tax exemption. Mm-hmm. And so I wanted to kind of reference that. The sales tax, first of all the chapters are federally tax exempt under your group exemption under CMSA. Then that's
right.
what Kelly was talking about earlier. Also, all the chapters are 501c6, which is not an automatic sales tax exemption. And my understanding that even a 501c3 in their state would still have to apply for exemption. It's not automatic. Is that correct?
That's right. I mean, there's, you know, in Arkansas, and I keep coming back to that obviously because I deal with it the most. In Arkansas, there's a list of about 20 charities that the Arkansas legislature has exempted from sales tax. So it's not automatic, even if you're a 501c3. Now, it's typically almost always automatic for your resale, but when you buy things for your organization, the exemption is not automatically there. And it's usually for, you know, it's big national organizations, like in Arkansas, Boy Scouts and Girl Scouts are exempted from sales tax. It's organizations like that. So, yes, always understand states can be very, very different than what the national IRS requirements are. And sales tax is one of those. Some states automatically exempt any 501c organization from sales tax, and that's C3s, C4s, C6s, whatever. But the majority of states don't automatically grant that. Some states have an application process where you can avoid sales tax. But yes, that's definitely something to be aware of, because just having an IRS exemption in the majority of states, I would say, does not preclude you from having state sales tax responsibilities. I don't know of any state that precludes you from having any income tax. I mean, almost always any state's going to follow the IRS when it comes to income tax, but these other things like sales tax, personal property, that kind of thing can be different from state to state. Absolutely.
Okay. This question, this particular chapter has received their first 1099-K from their credit card processor. Is this something new?
Yes. What it was is IRS got in their mind that one way to track people's revenue was to require credit card companies to start submitting how many credit card receipts they processed for an organization in a year. And it was it started being required in 2011 or 2011. And so what that is any credit card company that's processing your, whether it's, you know, members walking into a lunch or whatever, they're required to report to you the gross amount of fees that they process. And now it's just using that to catch people like, you know, that are doing all their business online and that kind of thing. Retailers is mainly what that's for. Has a nonprofit organization. The only thing you would never want to happen is your 990. Let's say you got a 1099-K that showed $60,000 in money processed through credit cards, and you not file a 990-EZ. That's where you would get in trouble. Other than that, I wouldn't worry about it. I mean, it's not whatever revenue, gross revenue you reflect on your 990 should be at least as much as your credit card processing. And if you're keeping your books correctly, it always would be. So that's the only thing I would say. If you're an organization and you calculate your gross receipts as $40,000, but you got a form from a credit card processor that said you had $55,000 in credit card receipts that went through them, something's not right, and you need to figure out what it is, because I can pretty much assure you at some point the IRS is going to match that up and say you filed a 990 in, but we know you had at least $55,000 in gross receipts, so you should have filed a full 990, or I mean a 990 EZ. So that's where you need to be aware of those things. But as far as just getting one, let's just say you got one for $10,000 and your total chapter gross receipts was $25,000. No, there's nothing else to do. You file a 990 in and you're good.
Okay, very good. Okay, so there's been a couple of questions, and I'm just going to try to combine these the best I can, that are asking various things in relation to their board. So reimbursement for travel or meals, or what was the other one? You know, what's allowed as far as gifts or limits to board members, and that would include any kind of reimbursement or support and so forth.
Yep. Two things I would make sure that every board's doing. First, have a policy in place. Okay, so if your chapter is going to reimburse board members for meetings, if they're going to reimburse them for travel, get that on paper. Okay, and make sure there's minutes that record the vote to do that. There's nothing wrong with it. It's absolutely allowed. We have boards that do that all the time. We have boards that pay board member fees. Now, none of these. I mean, I'm talking about organizations with $20 million budgets. It's fine to do those things, but you need to have it in writing, and you need to have a policy about it. Once you have that policy in place, it's absolutely fine to do those kind of things. That's the first part. The second part I would say is make sure it's what you would do for anybody that wasn't a board member that came in and did something for your chapter. So let's say you got a presenter, and if a third party that had anything to do with your organization, and you reimbursed them for travel, and you reimbursed them for or you paid them for their presentation, and that was $500. You wouldn't want to pay one of your board members $2,000 for the same kind of presentation, for the same kind of work. So again, the question you should ask yourself whenever you do anything with a board member, or even any kind of member of the actual chapter, is this the exact same thing we would do for somebody that wasn't a member? And as long as you can answer yes to that question, you're fine. So again, make sure you have it in writing and have taken a vote on, as a board, of what you're going to do for board members, and make sure it's what you would do for somebody else that wasn't a board member. If you meet those two tests, absolutely, you're fine. Don't be scared. I don't want to scare anybody from reimbursing board members for legitimate costs, because that's fine. I mean, you're making a time commitment, you're making an expense commitment for this stuff, but you need to have it in writing if the IRS ever comes and looks at it. Just get it on paper, and it doesn't have to be formal. I mean, but something that says, okay, we voted to reimburse our board members for travel expenses for meetings. We've voted to reimburse them for meal expenses for meetings. But get it in writing, make sure it's what you would do for somebody else, and you should be fine.
And along with that, Kel, too, do you recommend that they set, also a guideline on what that allowable reimbursement might be, so that it's being consistent, where, one board member might have meals that they went and bought steak and lobster, and it was, $50 for the meal, where others might be frugal with the money and, buy a sandwich. And
yep.
I know a lot of them, let's say, $25 for meals or dinner or something like that.
Absolutely. You can go out to, and you can, Google is your friend here. IRS, that's what's called a per diem, PERDIEM, per diem rate for every city or every major city in the country. And you can Google or go to the IRS website and look at what the per diem rate is for breakfast, for lunch, for dinner. And I would never reimburse for more than that amount. And it's pretty generous. But you can do that, and I would say if you're trying to set as a board a maximum, that I would base it on that per diem rate. And like I said, they'll break it down for lunch, they'll break it down for dinner of what you can give to a board member, and you can usually look at it per city, or at least a city that's close to you. And yeah, that's what we usually suggest clients go by, is the IRS per diem rate for meal reimbursement as setting a maximum.
Okay.
And then that apply to conferences, whatever you send them to, absolutely.
Okay. On the 1099, there's been a few come in on that too, so I'm going to try to combine a few. But so someone comments they know that they have to submit a 1099 for speaker fees over $600, but what about maybe catering or and that they also kind of tied in the travel and the meals, which would actually be more of a reimbursement than a payment.
Yeah.
Different.
Exactly. That question comes up a lot. Reimbursements, no. You do not have to issue a 1099 for reimbursements. So you always pull that out. If you pay a speaker $650 and $250 of it was their airfare or their hotel or whatever, do not include that in their 1099. It's just for the personal service aspect of that. For a caterer, we always say, a lot of times your caterers are going to be incorporated entities anyway. It never hurts to issue a 1099. We always err on the side of issuing one when we might not should have, as opposed to not issuing one when we should have. Caterers we typically don't do because what you're really paying for is the food. And most caterers don't break down service, food, whatever. So, no, typically as a firm, we don't do that. But like I said, I would err on the side of issuing one when you have to, and on the front end because like I said, if you get a W-9 on the front end and they check the box that they're incorporated, you don't have to worry about it no matter what.
Right.
So when you have a question about it, print you off some W-9s, have the people fill them out, and a lot of times they'll tell you, they'll check the box for incorporating. You don't have to worry about it. But no, typically we don't. If there's a tangible thing that you're receiving, like food, we don't issue a 1099 for that because you're not required to. It's just the service part of it that you have to issue a 1099 for.
Okay. And like you pointed out, if they're already a business, then you're just paying the business the service, not an individual who might be contracting with you.
That's right. That's right. And an incorporated business. Now, partnerships, sole proprietorships, you have to issue a 1099, and LLCs. And this could be another hour-long webinar. LLCs can be taxed different ways. Unless the LLC specifically checked a box on the W-9 that they're incorporated or that they're being taxed as a corporation, we usually issue them a 1099 as well. So there will be businesses you have to issue a 1099 to, because a lot of your speakers, if they speak a lot, might have an LLC that they run their speaking fees through, and you should issue them one. But if they have if they're incorporated or they're taxed as a corporation, they might check that box, and you can rely on that W-9. If somebody gives you a W-9 and they say they're incorporated, you have absolved yourself of responsibility to issue them a 1099.
Okay. Let me see which one. So a couple of questions coming in about, is it okay when they have vendors that sponsor like a dinner meeting or something? Is it okay for the sponsor to pay the facility or the caterer directly? And if they do, then just verifying whether the chapter would have to report anything on their own income tax statements or reporting and so forth.
Yeah, technically that's a in-kind contribution. If somebody comes in, and even though the money never flowed through the organization, The IRS refers to that as in-kind. So technically, if they pay for you to use the facility, if it's somebody else's facility, so say they paid a rental fee for you, or they paid the caterer for you, even though the money never came through the chapter, yes, that is technically a contribution, and would technically go towards the $50,000 to report for a, to trigger a 990 EZ requirement. Now, if one of these vendors brought you into their own place and provided lunch or dinner or whatever, that's different. That's considered a use of facilities, and that doesn't go towards it. It's very, and I understand it's tricky, and if you ever come across this, it may just be easier to ask me. But yes, if your caterer usually costs $300 a meeting, and a vendor says, I'll pay $300 and I'll pay it directly to the caterer, that's a $300 contribution. It's an in-kind contribution. It's a non-cash contribution, but it does count toward the $50,000 requirement of filing a 990 EZ. So that's something to be aware of, absolutely.
Okay. A couple of other questions I'm going to combine. Just asking about if chapters are able to use chapter funds to do a giveaway for maybe a membership or a conference attendance, and then if so, how would that information get how would that be reported on their forms, their IRS forms and such?
Okay, two things to be aware of on that. Yes, you would put on your, if you have a 990 EZ requirement or a full 990 requirement, there's a place, there might be a designation for something you paid on behalf of a member. The other side of that is if you had a giveaway for something that was worth more than $600, you have some requirements to report to that individual. I mean, when we have clients who sometimes will give a prize for top selling salesperson or whatever. They go on a trip. That's taxable income to them, and you have a reporting requirement there. And if you're doing any of that kind of thing, I would suggest let's talk, because we can. I can send you some information on how to report that to them. But yeah, you have there's a like I said when I was talking about the 1099s, prizes and awards that are worth more than $600 require a 1099. So if you're paying, even if you have a drawing to send somebody to the national conference, there's a reporting requirement there to that person, because if they would have normally have paid $600, for airfare to go to a conference, and you're not paying that for them, that's a taxable transaction. And there's ways to work around that, but it's definitely something we need to talk about. Absolutely.
Okay, great. We'll start closing it down here, but I have, let's see, this is a fairly simple question. How do you access the 990N? I don't receive an email. And I can already say, I think the only way really to do that is to go onto the IRS website and download the form, or I think you actually fill it out online. It's not even a form you download anymore, correct?
That's right. That's correct. You need your name, you need your employer identification number, and you need your address. And you can file the 990N online. Absolutely. Just do that.
And IRS is not going to notify them that it's time to do that. That's something that the chapters will have to initiate on their own.
That is, again, and I don't hate the IRS, even though I have to deal with them all the time, but for some reason, for the first 2 years of this whole thing, when this came out in 2006 and then got followed up in 2008, they notified every organization on their books that you have a filing requirement. Well, the frustrating thing about that was they went back to their last known address. So there were some organizations that hadn't had to file anything for 20 years that had an address on file, and the IRS never tried to follow up with them, even if they got returned mail. So, and they only did that two times. They did that the first 2 years, and from now on, they do not notify anybody. So, I mean, we've had organizations, and even I can think of a couple of chapters of CMSA, they didn't know until they got online and looked or tried to file their 990-N, and the IRS said, oh, what are you doing? You've already been revoked. So, yeah, if your address has changed, I mean, if you've had a treasurer that was around 10 years ago, and that's the address on file with the IRS, that's where the IRS mail is still going. And I would tell people, you can go to the IRS website and you look under Charities and Nonprofits tab. You can put your employer identification number in, and you can see what address the IRS has on file for you. And if that needs to be changed, it needs to be changed because they will not tell you that you haven't filed for the previous 2 years and you're about to be revoked. There's no warning whatsoever.
Okay. So this leader has a question about they own their own business as a consultant, but if they travel for their chapter, should they take credit for the expense as a business, or should the chapter take credit?
If the chapters, you know, I'm hesitant to give any individual tax advice for somebody I don't actually see their return. If the chapter is reimbursing it, obviously the chapter needs to take credit. Mm-hmm. If the business, you know, if you're a consultant and you're traveling in your capacity as a board member, it's hard for me to answer that question. I'm not sure I feel comfortable answering that question.
And I would think, Kel, too, that it kind of goes back to your mention of the policy. So if the chapter doesn't even have a policy about reimbursing board members to do chapter work, then it might not even that they would be able to get reimbursement if the chapter doesn't have a policy that they normally do that.
That's right. That's right. So. Yeah, I'm just, you know, the most I can probably say to that is consult your tax advisor.
Right.
That's just tough. That's tough for me to answer.
Right. And know which hat you're wearing when you're going on these excursions. Are you there to represent the chapter, or are you there to represent your company?
That's right. Yeah, it all depends on what capacity you're acting in. That's right.
Okay. Someone asked about the core ID, and was that the same as a tax ID? I've not heard that term. Do you know what that is?
Yeah, I'm not sure I've heard that term either. I don't know if that's a state thing, or the IRS goes solely on employer identification number.
Okay.
So I don't know if state has another one for that. That may be their state identification, but I've never heard of it.
Okay. And then someone is asking how long it would take Thomas & Thomas to process a 990 for a chapter.
A full 990 or EZ, that depends. I mean, usually we try to get all our 990 EZs filed by May 15th. It kind of depends on when we get the information. You know, we're a full-service firm, so we do things other than nonprofits, and you know, corporation return, taxable corporations are due March 15th. Taxable partnerships and individuals are due April 15th. Nonprofits are due May 15th, and we work around those deadlines. So, you know, if we get your bank statements and your follow-up information by March 1st, you know, we try not to have more than a month turnaround on anything. I cannot always promise that's going to be the case, but if we get it by March 1st, it will be filed by May 15th. We try not to extend anything past May 15th if we get it before March 1st for sure. Usually by April 1st, but you know, we try to manage expectations. But that first extension is not really an issue. It's the second one where you have to have a reason that kind of comes into play. But we try at most times of the year to shoot for a month turnaround once we receive all the information. But I can't I'd be lying if I said that always happens, but there's typically a reason.
Okay. I think I really just have one more, and then I have a closing reminder too. But this individual, and this may be more of a legal question than a IRS financial kind of question, but can a board member also serve as an executive director and be paid as the executive director? So can they have that dual role as a regular board member and an paid executive director?
Absolutely, they can. What I would make sure of is that the board outside of that member, so that board member would need to recuse themselves from this vote, that the board voted for whatever they're paying. And I would have that documented. So let's say there's 7 board members, they decide to hire this one board member as an executive director, and they desire to pay that person. The 6 other board members need to vote on that. That board member needs to specifically exclude themselves from that vote, and it needs to be in writing that was voted on by the 6 other board members. There's nothing wrong with it. We've got chapters that do it. We've got other nonprofit organizations that we work with, but that board member does not need to vote on their own compensation agreement.
Okay. And I would assume there may be other things that come up. I mean, if they're a board member, but even if the board's talking about anything that has to do with even the responsibilities of the executive director or something like that, they would always recuse themselves from those discussions.
Absolutely. Any time there's a transaction that's involving a board member, and I don't care what it is, even if it's just paying the board member to go to the conference, which again we've already talked about. That's fine, but that needs to be in place before any of this comes up. And so I would stress if that's something that the chapter wants to do, vote on it now before you're talking about the specific board member that's going to benefit this year. So if a chapter says, okay, we're always going to send our president to the national conference and we're going to pay for it, that's fine. That's not a problem. But the board should vote on that now, get it in writing, and the president should recuse himself from that vote.
Okay.
Okay?
Great. Well, super job. I want to just remind folks that this was recorded. So with the recording, you'll see the slides. Again, I've had a couple of people ask about could they get the slides, but the recording is even better because it has the actual audio of the presentation. Without that, the slides might not have much meaning or understanding behind them. And a couple of people have asked about the requirements you mentioned, the other requirements outside of the IRS forms. Nikki did send out an email probably 3 or 4 weeks ago, and we will send out another one, but it outlines these deadlines, the forms that we need. For those of you that are engaging in another firm to help with the accounting process of the IRS forms and everything, there is an opt-out form that, as Kel mentioned, we just need that back just to basically let us know that you are aware that this has to be done, that you're working on it, and you've already engaged someone else to do so. And if you do need, some support in filing your own 990s, whether it's the N or the EZ or the full, and do not have anywhere to turn to for support, we certainly can help connect you with the Thomas & Thomas group to do so. I believe that was it on my end. Any closing comments, Kel? Or?
No, I'm good. I just, again, front end, getting the stuff right on the front end is so important. And don't hesitate to call me because you think you're going to get a $1,000 bill. It's not going to happen. We just need to get this taken care of.
One other thing, if we did not clearly answer a question you had, or if you thought of questions afterwards, again, please do reach out to either myself, Michelle Lee, or Nikki, or even Kel, if it's something a little bit more involved. And if Nikki or I can't answer it, we will certainly reach out to Kel ourselves and help him draft an answer if we need. But don't hesitate to ask, and, we want to make sure, like Kel said, that everyone does get everything processed correctly so that you don't have to deal with some of these headaches that will come up later if you don't.
All right, good deal.
All right. Thank you so much. Everybody have a great day. And thanks to those of you that did stay on the line with us. We appreciate your participation. Have a great day.